Welcome to our webinar today. This is part of the New Jersey MEP webinar series that we're presenting on the Crisis Coach webinar series. Our subject today is talking about the value of internal audit in business crisis risk. And we're so pleased to have you join us. Beautiful weather here in Atlanta, and in New Jersey it's getting ready for the baseball season to commence, and so summer is definitely in the air. Invite you to become our friend. Facebook, we have an account, Firestorm Solutions. Twitter, we're known as Firestorm Soul. And there is a hashtag for this session. That hashtag is Crisis Coach. Firestorm transforms crisis into value and empowers you to manage risk and crises. Firestorm's expertise is in crisis management, critical decision support, crisis communications, crisis public relations, and consequence management. Please keep in mind the presentation today is not complete without the accompanying oral comments in the discussion, and the work product should be read and considered in conjunction with your organization's personal counsel. And do not interpret our information as legal advice or legal opinion. The New Jersey MEP and Firestorm are very pleased to present this series. This is the fourth in the 2015 series, and we're talking about enterprise crisis risk, internal auditing. Our presenters today are Jim Satterfield, the president of Firestorm, and Jack Healy, who's with a company known as the Genesis Group. He is an expert in business crisis risk. Our moderators are our good friends Joe Caratanudo with the New Jersey MEP and Blair Neville at Firestorm in New Jersey. Joe, over to you, please.
Thanks, Bill. As many of you know, New Jersey MEP's focus is working with manufacturers in the state of New Jersey to help them become more productive, more efficient, more competitive in what they do. And we do it through a number of different services that we provide. We help companies with managing energy and energy costs. We help companies take advantage of R&D tax credits and also to implement process improvements through Lean and Six Sigma methodologies. And we also get involved on the business end of things in terms of business development, strategic planning, innovation. And finally, one of the areas that we help companies with is obtaining ISO certification. And that's kind of an interesting thing because today's subject matter seems to be tied to crisis and internal audit. And that's something that our manufacturers are very familiar with in being compliant to the new standard. But the 2015 standard has some changes in it with respect to risk. And so internal auditing is something that is familiar with them, but I think the worlds of business continuity planning and ISO compliance have intersected, and I think there's some value in understanding how this all ties into maintaining their compliance with the new standard that is coming into play in 2015. So Jack and Jim, I'll be interested in hearing that aspect.
Right, Blair, do you have anything you want to add today?
Not too much, just that, Joe, thanks again for your support and Jamie's MEP support in all of these webinars. I just want to make a quick comment that we're lucky and fortunate to have Jack Healy here today, who's got some great experience with this, and I'm sure we'll share some stories that will help the people on the phone. So please, if you've got any questions, let us know. You really have a great opportunity to take advantage of Jack's experience in this. And Jim, if you want to get started.
Great. Well, we're glad to have everybody today with us as we go through this. And I think the value that the New Jersey MEP brings is the continuing education programs designed to fit the obstacles that you're seeing within your businesses. And we've spoken along over the number of areas. Jack is the Managing Director of the Business Crisis Practice here at Firestorm. And I think, Blair, you're right. There's going to be a lot of things to hear and learn. We've been focusing around, can you identify your organization's next crisis? we can, but more importantly, you need to be able to do that. And we've been giving you some tools, I think, through this webinar series that empower you to be able to make those steps. Our focus today is talking about the role that internal audit plays within that organization. If you're a large company, you have a department that focuses in this. If you're a smaller company, it's not a separate function, but yet it is a function that needs to be addressed. Today we're in an environment where there's an expectation of the management of risk, and when you look at this, there needs to be assurance for the board, the senior management, the stakeholders for your corporation, as you look at those items there that are listed that are specific objectives that we think about. When we think about internal audit, they answer the question, how do you know and are you sure? Have you really got a strong risk management process? Have you correctly identified the risk? Have you evaluated how your programs address those and how you respond to the risk appropriately there, and the controls and then the monitoring? And we've been talking a lot in the webinar series about an intelligence network, and we'll mention that again right at the end of the presentation today. But those are the types of things that you know you need to do, but how do you know if you're doing them, and are you sure? And that's what we're going to be talking about today in a little more depth. When you think about that, why do we measure these things? And I think the reason we measure is to be able to answer the types of questions that you see on the screen. Being able to survive, and how do we stand relative to these standards and objectives, and do your plans follow best practices and standards, and what are the gaps? And by the way, are your suppliers, when we think about manufacturers, supply chain risk is a significant exposure, and as we look at the ISO standards that Joe mentioned earlier with the inclusion of risk within that, all of this comes together. So I think there's some good reasons for us to be measuring, but to know that, we've got to figure out where we are and then where we want to go. Then we can figure out the process of doing that. So that's the reason why it's good for you to stop, ask yourself those questions, and start to analyze those gaps. We'll also give you an alternative at the end as a way to maybe help and find that particular area. So I think it's clear why we need to measure. Now, what should we be measured? You've got to look at what your programs are. I was speaking with Joe over the last couple of days about a company in New Jersey and aligning to certain OSHA standards or environmental health and safety standards and doing training around those aspects associated with it. Great services from the New Jersey MEP that can meet those requirements. But when you do training, you have to train to what your plans and policies are, not what you want them to be, because that's the only way to make these things carry forward. So what are the goals that you're looking for? And are you in a regulated area? And we all have compliance issues that we're forced to align to and putting together. And when we think about it, we then want to zero in specifically on our plan content. Have we tested our plan? And testing a plan is a key requirement. It could be starting with something as simple as a walkthrough plan, moving forward on into a test exercise, a tabletop, and then a full simulation. Looking at your IT strategies, there's not a day that you don't pick up the paper or turn on the TV or look on the internet and another cyber breach has occurred. And this is a growing threat and issue that faces all of our organizations. But even looking at our facilities and our people and the processes. And then what's the trade-offs here? What's the return on investment? What's the penalty for the fact that we don't make an investment, the return on no investment? So those are all things that we want to measure. And we do that following a predict, plan, perform process. Understanding the threats and vulnerabilities, what are their impacts, how do you monitor, and the triggers. The plans cover all of the areas that we've talked about, and then the performing of the training and the exercises and the supplies and the monitoring, and then ultimately the crisis management. So in looking through this, we have seen a lot of factors coming forward to answer that question. Can you predict your organization's next crisis? And I think as we talk today about business crisis risk and some of the elements in that, you'll start to see how this becomes part of a holistic program within your organization. So Jack, is there a difference in risk and crisis, and how does that come together?
Yeah, there sure is, Jim. I appreciate you allowing me to speak to this group today. So as you look through the continuum of risk and how companies have looked at it, there's a framework out there that was devised by the Committee of Sponsoring Organizations, which is a group of very large companies and professional groups that are focused on internal controls and risk. And they created the COSO framework, which they've just for the first time in 20 years revamped to cover the risks associated with fraud and data breach. But they look at the likelihood and impact of risk. ISO followed suit. These two groups work in tandem, and as you know, ISO has also said companies need to look at unwanted outcomes and apply those. So it's really something that's bad that's going to happen, and that is something that you should expect to happen, but most people are in denial. Most companies are in denial, and they don't look at that. Through my career, looking at risk, I've often tried to break it into understanding the possibilities and then the potential, and then trying to quantify that, and then put mitigating events and processes around that risk. So I spent a great deal of time taking a look at this, and we came up with something we call the business crisis risk. And it's different from ERM, and I'm going to go into that a little bit, enterprise risk management. But the business crisis risk is the risk, you may want to go to the next slide, Jim, is a risk that's embedded in an organizational due to structural design or breakdown, operational functional processes. So what I'm saying there is that the structural design, meaning how the company communicates, board to management, management to front line, how you interact with your customers, what is the structural elements of your business that allow communications to flow up, down, and around the organization. Operational is the processes that you use in the manufacturing. How do you quantify the quality assurance of your suppliers, the products that come in? How do you look at the quality assurance of the products that are leaving? The OSHA requirements and all those other things. And then a functional process is the silo. So that is the breakdown or strengthening of HR controls or manufacturing controls, accounting controls, treasury controls. So it's across the top, around the outside, and siloed throughout a business, looking at the risk components that are in there. And obviously, if you don't eliminate these, you have problems, and the problems always show up in either people, turnover, theft, illegal acts, profitability, and always with the brand. And we've seen this time and time again, whether it's whether it's Apple or with their workers in China and the problems that they had there, or Chrysler with some of the issues that they've had, and most recently GM with their product recall. So the risk is important, and preparing for these risks is our responsibility as management. I was the external auditor for companies for several years, and I was CFO of a public company. And it always falls on management. It's not your outside people who are going to help you with that. So why is it important? Studying business crisis risk is the ability of management to look within that company, identify that, and the way we do it is with a process, and I'll touch on this later, called indicators. My background in fraud and occupational theft, you never see fraud. You only see the right results of it. Sometimes if you have a poor quality assurance program, you don't see the failure until the customer calls up or you have a recall or something. So the breakdowns, the indicators that are out there. So if customer service is getting a lot of phone calls, that could be an indication that you have a quality assurance problem. So looking at the indicators of risk, teaching your organization to recognize those indicators of risk are very important. Jim, you could go to the next slide. That'd be great. So it also empowers management to avoid and mitigate financial and human impact that cripple companies. So understanding business crisis risk, and that's what ISO is trying to do. That's what the COSO is saying. It's saying to management, look, you need to get your arms around this, and you need to have your entire management team and your and everybody from the manufacturing floor to your sales reps to senior management to the board, all looking at this subject and identifying it. And we all know in organizations that the best information are the folks who are closest to the problem, and they tend to be further down the organization. So the next slide is important. It's why is business crisis risk is not enterprise risk management. Because, you know, if there are any internal auditors that listen to this, because obviously if you see something that says the value of internal audit, and you're an internal auditor, I know I'd be listening. But it's not enterprise risk management. Enterprise risk management is more of a framework. It's high level, and you know, it tends to focus on the things that are predictable, and it comes up with, in my terminology, Pollyannic solutions. You look at a customer, if you look at a company with a high concentration of customer risk, they would say, well, what happens if you lose that big customer? And the answer is always, I'm going to cut my overhead. Well, in business crisis risk, we look at the specific mitigation, not non-specific. So if you say, I'm going to cut my overhead, in business crisis risk, we actually run you through the process of determining, well, what are you going to cut? Who are you going to cut? And then also, what communications are you going to have out there? What message mapping are you going to send to your customers, your employees, your suppliers? You know, what are you going to tell the markets? What are you going to tell your bankers? What are you going to tell your board? So these kind of things are the predictable ones, and it doesn't address bad behavior. So your CEO gets caught in a legal scam, or now with social media, you know, they don't even have to really do anything wrong. We saw one executive made a $2,000 contribution to a group in California that some people thought he shouldn't be making a contribution to, and the CEO lost his job. Well, when the CEO lost his job, it made all the news, and then people started dropping their product. So it can be a bad act, and it also, you know, provides the process in which boards would step in. Data breach has been where Firestorm has been spending a lot of time talking about at what point do management and boards get involved. So it also, you know, the easiest way to look at it is that business crisis risk is the granular execution of these problems. And it also looks for the unforeseen. And it says, okay, look, it gives you a process by which to look at whether or not you're going to have a board intervention. It has an escalation. It looks at every problem and gives you the framework to deal with a problem, whether it's data breach, product recall, or anything. It is a framework that you follow as you go through that. So moving on to the next slide, you know, we talked about, you know, can you really predict the crisis? And I talked a little bit about the indicators. And it's, you know, we're saying yes. If you're looking for it and you start to see the problems, you identify it earlier than if you aren't looking for those indicators, or you do the explanation. And I want to move into the process that we go through to look at that with the pre-action, onset, impact assessment, response recovery, consequence management. These are all things that business continuity folks have been doing for years. This is the process that they go through. Now, the only issue we have with that is a lot of these processes they go through have to do with the predictable events. So it's the fire, the earthquake, and that sort of thing. So as I started studying this and working with Firestorm, I originally started working with supply chain risk. And, you know, how do you look at your suppliers and your supplier's suppliers? And what are the sources of risk in the supply chain? And we had customers that, you know, we had a large firearms manufacturer. And, you know, at first the problem was they couldn't get enough avenues of supply. And then the problem was, well, all of a sudden firearm manufacturers couldn't get financing. The largest banks said, look, after Sandy Hook and some of these other tragedies, they said, we don't want to invest in you. And then the large pension plans. So we went from a supply chain risk to a business risk. And this model, the crisis management model, works great. But I said, well, what about if we could see this earlier? And so we came up with what we call what I've termed the business crisis predictive diagnostic model. And this is really a culmination of all the years that I've worked as an internal auditor, a CFO, an advisor to companies, and you can actually predict and see problems occurring in a business. Now, if you look at this quadrant along the top, we have levels of urgency. The vertical axis is, you know, is it extremely urgent? It's something we've got to concentrate 100% of our efforts on, or is it reactive and urgent? meaning it's come up, I'm going to deal with it right now, but it's not all-encompassing. I'm going to be managing multiple tasks. And then along the horizontal axis, you see we break it out as whether or not it's targeted or complex. So targeted is something that you normally can put your arms around rather quickly, that it's something that is very clear, and if you act quickly enough, you can resolve that. Whereas the complex are cascading problems. One problem leads to another problem. Poor quality assurance leads to non-conforming inventory, leads to customer sending items back, leads to the bank not lending on all your inventory, leads to cash flow problems. So as you can see, it's cascading. So if we look at the quadrants individually, on the next slide, you'll see that the upper left-hand quadrant is the place that business continuity has been focusing on for decades, which is the urgent targeted event. The attributes of that are confusion. You get the call in the middle of the night, as I did, that your largest distribution center had been hit by a tornado. And how are you going to ship? And the only saving grace was it happened at 4 in the morning, and we didn't have any employees in there, and it happened on a Friday. And it also happened in a town where the textile industry had left a lot of vacant space. So we were able to put our business continuity plan into place. We got to work going forward. But it's cascading events will happen quickly if you don't have your message mapping and you don't have a structure around it. So if the Jets goes down with the executives, as unfortunately happens from time to time, what is the plan? What's the board's reaction to that? So, and we give the examples down there, earthquake, tsunami, and that sort of thing. But now we start looking at the business piece. In the lower left-hand quadrant is reactive and urgent, okay? And these are what I call the everyday problem that a business runs into. So it's the events that'll happen. You lose your lease. You have inconsistent HR policies. Many companies or small businesses will give, one person a day off and not another, or make a payroll advance to one person or another. Or I had clients there, an entrepreneur owned several businesses, and they would have, and they'd all be under one holding company, yet they'd have different pension or profit sharing plans for every business, or different health plans. So sloppy policies and that sort of thing. Poor sales cutoff. That's an indicator of poor accounting controls. Or that part of the manufacturing floor where there's blue tape around it and says this stuff has been sold and shipped and we're going to count it in this month. Because we are going to hit our sales goal. But everybody knows it hasn't left the facility. It really isn't a sale, but it's out there. Inappropriate sales reports. No bid contract. Just sloppy businesses creates a problem, and when you create the problem, you then go after that, and that really leads into the next quadrant. And the next quadrant is where you have enough of these problems that they start to compound upon each other, and when they start compounding, when you start having poor HR policies, that'll morph into a whistleblower complaint. If your company, if you have more than 75 employees, you should have a tip line. They're inexpensive, and it allows, and you make sure your suppliers and your customers know that there's a tip line, and so that you can actually get better information about what's going on out there. But this type of failure, although it's reactive and urgent, they're more complex. It's the ineffective processes just continue to erode functional efficiencies. This is where I hear management blaming events. I had somebody who, this client owned his own facilities. He's the sole tenant. He's 65 years old, and his loan came up for renewal, and the bank wouldn't loan him the money because he's a sole tenant and he's 65 years old. Yet his excuse was it was Dodd-Frank. Dodd-Frank means that I can't borrow my money. No, you need to get another tenant in that building or have a succession plan. Okay, if not for this, we would have. How many of your businesses blame the weather for a poor quarter? The U.S. government did that with their GDP. I was amazed. And, you know, if you look back, the last winter was terrible too. You know, I was in a client in Milwaukee for the first quarter of last year, and it was cold and snowy every single day. And yes, this year was worse than last year, but, you know, there's relative degrees of it. You know, I went to school at Syracuse, New York, and I think Syracuse this past winter had the coldest winter in their history. Yet manufacturers still manufacture it, and people still bought because they're used to the cold, they're used to the snow. But it's the if not, we would have, and you need to take a harder look at what you're doing. And so that these problems, the FCPA violations, the data breaches, the illegal acts, this is where the failure of management to recognize and have good internal controls and good risk analysis, it starts to morph itself. And then we go into the death spiral, the next quadrant. And the next quadrant, and it's red, it's extremely urgent, extremely complex. This is where you lose control of your business. Things are spiraling out of control. And by losing control of your business, I mean the banks are telling you how to run it, your dissident shareholders are telling you how to run it, your suppliers are telling you how you're going to run it because you're on COD. And this is where all those problems that you have can come together and make it so that you're not even in control anymore. And this, unfortunately, is where management finally wakes up and starts taking the actions that they should have made, or third parties are making the action for them to turn this company around. Now, I always paint these, and if you look at this, these are all bad things that I painted to this. But you know, lack of innovation or lack of planning for a large expansion. You know, how many of us have said, you know, we're the dog chasing the car, the big customer. And when we get the big customer, we'll figure out how to handle them then. Well, then we catch the big customer, and that big customer is someone like GE or Ford or Boeing. We find out we priced this thing way too low, which is why we got all the volume. Walmart has put, you know, and that's why people say, well, Walmart put my company out of business. Well, no, you did. You cut the deal with Walmart, and you didn't do your homework. So I always paint them as bad things, but it can be good things that you didn't think out quickly enough. So if you take another look at the entire quadrant, and you can see how these problems roll through. The upper left-hand corner, as I said, is where business continuity planners, you know, have been there. And I was at a data breach conference, and the head of cyber security for Deloitte said, if you don't have a business continuity plan and a business interruption plan, then there's no reason to have a cybersecurity plan because you won't know how to react if you do have a problem. So in the lower left-hand corner, you start having these little problems. You don't handle the problems, you start having more problems. It shows a lack of rigor, a lack of discipline, and it moves across to the right, and then it all comes crashing down on you, and you go in the upper right, and either you sell your company, it goes under, or you lose control of it. You know, Darden Foods that owns the Olive Garden, their board lost control of their business. You know, they were still making spaghetti, they were still doing, you know, still making money, but they had a dissident shareholder who was giving them a lot of information on that. So if we go into the next few slides, we look at, you know, the indicators, and I've mentioned that. So this really is what you need to train and to look for within your business. And it's sitting down in a room, and I'm going to go through the 7 steps quickly later on, but the indicators, the clues and cues that things are out there, and it can be something you either read, hear, and in some cases, if you're a business owner, you can feel it. You know, how many of you go and judge your business by how the cash flow is, or what the production cycle is, or what the downtime on machinery is? You know something's not right when the company's not running as efficient or as well, or you start getting those calls. So I listed some indicators below here that the customer service handled more calls than usual regarding a product. I actually had a client who used their customer as their quality assurance program. And be careful, you realize I say the word quality assurance because there is no such thing as quality control. You can't control quality. You can only assure that it's there. So they actually used their customers, and their product would come back. And, of course, they brought me in because they'd run out of money. And they said, oh, we have this inventory problem. As we dug into it, we said, no, you have a warranty and quality assurance problem. And they were buying from China, and they were sending specs over to China, in an email, and not even in Mandarin, and so the problem was bad inventory, but it really was quality assurance. Sick days at one facility increased dramatically. Firestorm was retained by a very large retailer, an online retailer, to look at the distribution centers during the Christmas cycle, because they have 6,000 employees in these facilities, and through intelligence and social monitoring, they wanted to know what was going on because of the threat of workplace violence. It was during the Ferguson episode, and so they wanted to know what was going on. But they had sick days, and that raised their awareness, because usually people on a temporary job don't call in sick. Large customers request history of orders for the past 2 years. What would that tell you? If your large customer calling you up and says, hey, can you give me a history of your orders? You can pretty much so figure that they're shopping you, and you're in jeopardy of losing that customer. The person that gets that request, though, do they recognize that that is a problem? So, computer systems appear spotty. Every one of our data breach simulations that Jim and I run start off with, the internet's just not working the way you expected it to. What does that mean? And they always, are you under cyber attack? So as you look through these, and, you can come up with your own list for your companies. So if we go on to the next slide, there's a 7-step process that we can go through that will bring you through how do you vet out what your business crisis risks are. Now, sometimes we get called because the company has a specific risk. We want to know how to react in a data breach. We want to know how to act in product recall. We want to know, a specific event. But most often, people come to us and say, we want you to identify the top 10 problems that could happen to our business. Well, we actually never do it. What we do is we teach you to do it, and it's in the 7-step process. And the first step is to conduct a business crisis risk audit of yourself. And that's a process where you go through and with the help of a facilitator, you come up with questionnaires and you look at what you've done. But you start looking at what are all the bad things that can happen. And the people in the room, when you go through this process, are senior management, the top leaders, and the rank and the middle management that have to resolve the problem. And all they do in this first step is they talk about what could happen. In the second step, we say, well, what does that mean to us? So what does it mean for our risk tolerance profile? But also, what's the quantification of it? What's the speed of onset, the likelihood of occurrence, the frequency and severity of that impact? And you put that in a mathematical formula, and you may say, well, if a data breach happens to us, it's going to impact us by this, but we have insurance that mitigates that. So although data breach is bad, if we manage the reputational risk of it, we can get through it. And a great example of that is Target. Target made the decision. Target knew they had problems ahead of time. Now it cost the CEO and CIO their job. But they made a conscious decision along the way that they were not going to prevent a bad thing from happening. What they underestimated and what they didn't manage was a reputational risk. So let's fast forward. Home Depot, exact same scenario. Data breach happened a different way, but they had vulnerabilities, and they decided same thing. But they managed their reputational risk. So why did Target get hammered and Home Depot didn't? That's because they managed that. But they go through now. This second stage, by the way, senior management isn't in the room. And why don't I have CEOs, CFOs in the room? I don't have them in the room because they tend to overestimate their ability to handle problems and underestimate the probability that they'll happen. And that's why they're not in the room. But it's a cross-functional team. I failed to mention that. You have finance, IT, you have legal in the room, you have communications if you have it, you have you have all the folks that you would call into the crisis. Now, on the third level, that middle management team puts together the plan. We've decided, we've triaged it. We've said, here are the top 3, top 4, and we start working on the most severe, most important ones to us first, and we go through that. We then develop strategies. We learn from that. We go to contain those, So the learning is somebody's keeping a log. We contain the failures as they occur. Half of everything you know in the beginning of a crisis is wrong. You're just not sure which half it is. So you work on that, and they contain, and then the process of resolving it, and then the hot wash. And we just want to spend a couple of seconds on the hot wash slides. So after you've looked through that, the hot wash is the after-action discussion that you go through after the crisis has occurred. Now, there's a process you go through, and you actually keep a log when and this is a formulation of processes and steps that have been tried by large companies, Tylenol, Scare, DuPont's been through it. And after the event, though, you have to do a hot wash to say what worked, what didn't work, and what did we learn from this, and what are we going to do? And there's a specific methodology that you go through, because if you don't take the time learning, a lot of times companies will go out there and they'll pat themselves on the back. You'll see out on the Firestorm website, I've got a blog, and it's also on my LinkedIn, that talks about GM giving Mary Berry, the Fortune magazine gave her the Crisis Manager of the Year. They gave her the Crisis Manager of the Year before the crisis is over. And one thing you need to have is somebody who declares the crisis over. It's only after the crisis is over that you have the hot wash. And if you go to the next slide, Jim, the steps of the hot wash, as you can see there, is to review, the obtain feedback, look at, did things work the way they were supposed to? Did each function work the way it was supposed to? Identify the priorities. What should we have done and when? Did we make the right move? And, having a journal and having your lawyer actually ask you to keep that journal on his behalf, because that's what you want your inside counsel, or better yet, your outside attorneys to have you keep that, allows you to go through this. You gather the actual, financial impact of it. You take a look at what was out there in social media, and then you look back to your existing plans. Now, odds are, this crisis ever happens to you again, you're going to be loaded for bear. You're going to be able to handle it. But in reality, this crisis won't happen again. It's going to be another crisis. So if you go through the process of handling the 7 steps and spend a lot of time in the hot wash and going back to your source documents, then you'll know exactly how to handle the next time it happens, whether it's a data breach or whatnot. So, Jim, I don't know if you have some parting thoughts as to, how to wrap all this together and what a company should do for next steps.
Well, Jack, first of all, thanks for sharing the insights and the directions as we go through this process. And one of the things that Jack and I are working together and talking to businesses, large and small, we're seeing a variety of issues where the problem is misdiagnosed, as Jack just described. The cause was different than the way it's being described, and the impacts are different than the way they're being described. And that leads us to coming up with this approach to be able to attack the problem. And one of the things that Jack said that you may have missed is the key here is empowering your management team not only to deal with this crisis, but the next crisis and the next and the next. And how you respond to each crisis may well, in fact, become your next crisis as we go forward. So I think if you put this in perspective, do you really want to know what will happen tomorrow? And we talked about reviewing your plans and understanding, and Jack did a good job of talking about warning signs and indicators. Those are all the cues that will tell you that you need to update your plans, make sure your people are trained, and that you're in fact ready to respond. Today, we're in an environment where you can't afford to not know what is about to happen. And understanding that gives you the controls that you need to have in place. Certainly, we would like to find opportunities to team with you, and if you would like to align your plans to best practices or create your own intelligence network, and we've spent a lot of time around that, and we will continue to do it, there is information that's directly available to you that will help you in each of these areas, or to schedule some crisis coach training. The New Jersey MEP has underwritten the cost of this webinar series, and in providing that, if you would like an analysis of your business continuity plans, that's included, and it's included for you at no cost. The cost of that's being underwritten by the New Jersey MEP as we come forward to do that. Our thanks to the New Jersey MEP for doing this program and the continued support that they supply to all of us that work in the New Jersey area on a regular basis. Joe, anything you want to share with us as we start to wrap up today's webinar?
No, nothing other than our free assessment is available by just going to our website at njmep.org, and Blair and I will be happy to visit any clients to conduct that assessment at no charge.
And as you think about today, and Joe, thanks for doing that and making it available, you can also reach out directly to Firestorm at firestorm.com, or send us an email at webinars@firestorm.com, or call us at 800-321-2219. I'm going to ask Blair to try to reach out to everybody who is on the call today, because there may be some particular questions about how does this apply to your business, what do you need to think about and do. We want to thank you for attending the webinar and attending the series, and as part of the continuing education program that the New Jersey MEP provides to all of you. But I think today is a good example of learning that there are business risks out there. There are business crisis risks, and if those risks aren't identified, if they're not planned for, if they're not trained, and if people are not aware and recognize them as they occur, the impacts will be disproportional onto your business. And as you move from those events that are targeted to becoming complex, those that are reactive and urgent to those that are critical, you can start to see how this pattern comes together. Jack, do you want to share any parting comment as we wrap up today's webinar?
Well, I would just, I really want you to take a look at the ISO as this started off, taking a look back at your ISO and your enterprise risk plans that you have out there. And there's plenty of information out online on COSO. And bring this back to your organization and really sit down and say, what if? Instead of being in disaster denial and crisis denial, start to take a look at what you can do tomorrow to help mitigate the next crisis. And I think ISO and COSO have given you a great framework to start with. I would just challenge you to take it a step further and really get granular in your thinking. And I appreciate this opportunity. And the intelligence network, which I know, Jim, you'll have other series on that, is a key piece to this, developing your intelligence network.
Thanks, Jack. And when we think about the ISO changes that are coming out, that came out in the first quarter of this year with the quality standard now including risk as a key element, there are programs in place that can help in that area, and that's a specific area that's a key element associated with it. So thanks, everyone. There'll be another webinar next month, and you should receive an invitation. Look either on our website or the New Jersey MEP's website, and you'll see the content and the information. Thanks, everyone. We appreciate your time today, and enjoy spring. We're certainly glad to see some evidence of that coming. Now, spring, there's a crisis I'd like to handle. Thanks, everyone. Have a great day. Have a good day. Bye.
Thanks, Jim. Thanks, Jack.